Good morning. Today we're going to see about cost accounting. The concept of cost accounting organizes the costs involved in the production of goods and delivery of the services. That is helping firms analyze the data and keep track of incoming and expenditures of the company. This accounting procedures consist different types of costs to make the analysis as accurately as possible. The objectives of cost accounting is to make a reliable comparison between the input cost and the output generated. As a result, it becomes easier for the companies to access their performance and understand how effectively they use the funds. The type of cost include fixed, variable, direct and indirect costs. Fixed costs don't change with increase or decrease of production units. For example, rent is a fixed cost. Even if the production increases or decreases, the business must pay the same rent monthly. Variable cost changes per the increase or decrease of the production units. For example, the cost of raw material is variable. The total cost of raw material changes if production increases or decreases. So now we're going to see the types of cost accounting. The concept of cost accounting is classified into different categories. Given the nature of cost of company normally records standard costing, as the name suggests, consider a standard cost for all direct costs involved in the production process. It is one of the best accounting method for the small or medium sized businesses. Assigning average cost simplify calculation and analyze to great extent. The second category is activity based costing. Firms use this method to track and analyze the fixed and variable costs based on the business objective that the direct cost of the product line to fulfill. A leaning account is a practice that advocates the reduction of wastage and an increased productivity. It deals with improvising financial management techniques by identifying the cost wasted. As a result, the concerned department cuts down unnecessary cost and adds value to the more important task, increasing the firm's productivity. Also known as the cost volume profit (CVP) analysis or marginal costing, consider total fixed and variable costs for the products produced. Then the accounts use these expenditures to compute the product level where the company start earning profits. Features and functions. It is recommended to explore its feature to understand the cost accounting definition better. This feature also gives an overview of the function and objective of the cost accounting. That is ascertaining cost, keep checks, ensure accuracy, organizes data, prepares budget. These are the scopes and functions of the cost accounting. uh, Examples, bank ABC decides to determine the cost of processing different transactions for customers. Thus it undertakes advanced cost accounting and identifies different processing cost for checks and deposits. Besides presenting the data in the proper format, this process helps the bank to access the cost involved in processing international wire transfers, maintaining a check accounting, monitoring a mortgage loan and other finances. In short, accounting for the cost offers firms a clear view of the cost involved, letting them fix the pricing of various banking products and services. Like total cost is equal to fixed cost involved plus variable cost is cost per unit. Now we are going to see the advantages and disadvantages. While the importance of advanced cost accounting is significant, it is also important to go through its disadvantages. Here is the list of benefits as well as limitation of cost accounting. Advantages: it helps in setting prices, it identifies unnecessary cost involved, it enhances productivity, it helps the management make effective decisions, it makes it easy to prepare the budget. And the disadvantage is it records past data and it costs keep changing every interval. It expertized recorded and it's expensive maintenance. Cost accounting versus financial accounting. So cost accounting helps in tracking the costs related to various business activities, whereas financial accounting helps in recording financial transaction. The difference between them: cost accounting, it tracks the cost of business activity. Information is related to labor, overhead and raw material. Valuation is done at cost. Reporting takes place and as when management needs them. Purpose is to reduce and control the cost. And when it comes to financial accounting, it tracks the financial transaction in a business. Information is to relate monetary transaction. Either cost of the net realizes value is used. Reporting takes place quarterly or yearly. Purpose is to record financial transaction. Now why is cost accounting is important means, cost accounting is important as it presents cost related data in an organized manner, making it making to easy read, understand, interpret and analyze. The most important function of the process is that helps identify the waste cost and make sure to cut them down to enhance business productivity. I hope you all understand. Thank you.